Good morning and welcome to the Abundant Retirement Show, the Abundant Retirement Program. It's all about your abundant retirement, and it's all about Ross Wealth Advisors, and that's why Don Ross, the retirement boss, is right here sitting next to me. Good morning, Don.
Good morning.
How are you? I think it's got a little battling a little cold.
So if no one minds me, sneezing in my tissue.
That's right. So
we'll get through this.
If it sounds like a sick word, it's just Don. Don't worry about it. He'll be fine. I'm sure he'll be fine.
Yes, I will.
You brought back a little Florida cold with you. That's apparently what happened.
Yes.
See, that's what happens.
It's on the airlines with those kids there, that are sneezing and.
Well, nothing like being in a 60-foot long tube with 87 people that have some level of sniffles.
Yeah, no, I don't blame it on the kids, but, even the adults are sneezing, but the kids were the ones screaming most of the way back. So
yeah, that will happen from time to time, but
that's why we're parents. We love the kids.
You always keep your fingers crossed that you don't get on one of those flights, but it does happen.
Right,
it's just one of those things you can't. It's just part of life.
Yeah,
You're rolling the dice anytime you get on a plane or any other conveyance that you're not in charge of.
My private jet was booked up, so I had to fly Southwest.
I appreciate you letting me use the private jet, and
Southwest Direct
made you had to fly commercial. It's such a shame. Terrible thing.
Yeah.
We're here not to talk about Don getting a cold on the flight back
my
from
travel
Florida,
habits,
but rather your abundant retirement. That's what Ross Wealth Advisors is all about. If you are retired or retirement minded, within 5 to 10 years, you're making your plans. You really need to make sure that the plan that you have, if you even have a plan, is right and is right for you and is right for this stage of your life, which is retired or retirement minded. And it's all about lack of time, really. It's time for you to make sure that you have everything in the right order and you have a written income plan. And Don is the guy to have on your side for that, honestly.
Yes, I appreciate that, and I always appreciate your remarks. So today, I wanted to revisit my book again. I wrote a retirement survival guide that's similar to the survival guide I received in boot camp as a young Army recruit. And this book was written years ago, but I've edited it 3 times. Many of my clients have read it. Many of you have read it out there, but many of you have not. I want to get a copy in your hands.
I want to ask you something about that. You've edited. You wrote the book initially, the 2012 Retiree Survival Guide, and then you've gone back and you've changed it. Just as a matter of reference, what's changed over that period of time? I mean,
actually, nothing. The family picture.
I was going to say the whole premise of what you do and how you do it. It probably is not changed greatly.
Not much. It's just, I wanted to spruce it up, so I made the cover more camouflagey, and it's got a picture of me.
It's a very nice picture.
In front of my helicopter.
I'm not going to ask you what year that was, because I know it was not in this century, I bet.
That was a few years back.
Okay,
but,
fair enough.
It's on my website, rosswealthadvisors.com, if you want to request one that way.
As soon as you go right to the rosswealthadvisors.com page, it's one of the first things that you see after the video that shows you and your team. And your very nice offices here in Arlington.
Yep. And or give a call, 614-545-0277. So it's 10 chapters of the most important topics I found with my 30 years of experience working with families that are worried about income. What do I do when my paycheck stops? Will my assets last my lifetime? What about long-term care, health care? What about taxes? That's chapter 2. And I talk about the tax time bomb we'll see one day. What I mean by that is all the monies you've put into your 401ks, your 403bs,
all sitting there and growing.
All
and
these pre-tax
nice big
plans.
Pile.
Yes.
Yep. Somebody would love to get their hands on it, and that somebody is Uncle Sam.
Right, and he doesn't send a thank you letter. So.
No, he'll send a you better get handed over letter, but not a thank you letter.
Yeah. So one of the biggest focuses, Joe, we spend our time with our clients is trying to figure out how do we pay the least amount of tax. In fact, I was just visiting with a client today who just retired, and they have a substantial amount in retirement accounts, and they're like, how do I get this out? And that's the age-old question, but it all depends on how much income you need and how much you've saved, and do you have a pension? But Chapter 2, I'm talking about the taxes. So when you retire, you can begin to take the funds out of retirement accounts at 59.5. Some of you can be doing it earlier than that, like 55, but it all depends on your employment status. Now, at 70.5, you have to begin withdrawing a certain percentage of your retirement accounts, whether you have one, or I've seen some that have 10 or 12 from different employers, and we call that a financial junk drawer.
Is that called a required minimum distribution?
RMD.
I've heard of it.
Yes.
In fact, yes, it's very common. People
70 and a half.
70 and a half. And they're like, you mean I have to take the money even if I don't necessarily need it?
If you want to avoid a 50%
yes.
penalty.
Yeah, you don't want to get hammered on that.
So it's very important to understand if you're still paying in. Many of you out there listening are still working, thinking, I don't need Don Ross yet. Well, au contraire, because you might want to start looking at some strategic planning as far as maybe I don't keep putting the same amount into my 401k, and many of you are maxing your amounts out, and you're just kicking that tax can down the road. So part of what we do is look at, hey, does it make sense to keep putting it into that bucket? And I like the bucket system, and that's something I would work with you on one-on-one when we sit down. Okay, so taxes are something you need to consider, but I will not ever not talk about my MRI. This is the portfolio analysis, kind of like a medical MRI, a financial MRI.
It's where it all starts. It's where it all.
Yeah.
This is the first opportunity that you have to really look deep into what a person has in their portfolio.
Yeah, in your 401ks, your IRAs, your deferred compensation plans, all these plans many of you are putting money into. Taxes may not matter if you have a portfolio that's going to lose 20, 30, 40% in the next market downturn like
Yikes.
2008. So step one, which is call, email me, or we'll talk about how to text me, is doing a financial MRI on your portfolio. What risks are you taking that are unnecessary? How not diversified are you, if that's a grammatically correct way to say it? And more importantly, what could happen to your portfolio if the wrong conditions happen again? Not if, but when.
You know, when I sit here and I listen to you talk about what you do for people, for your clients, and for families, really, when it comes down to it. I mean, you're helping families. It's
absolutely,
you know, I mean, that's what it really is all about. And whatever that family unit happens to be, whether it's, you know, mom, dad, and great grandkids, or it's, you know, one person for that matter, that's still a family.
Yeah.
And I get so many questions come into my brain, and I have to go back and try to catch up with all of them.
Yeah.
And taxes is what you're primarily talking about today, and how to deal with the consequences of taxes and how to avoid, you know, the negative consequences of taxes. And it's not uncommon for people while they're working, while they're, you know, living their normal lives and raising families, to do things to minimize their tax consequences. You know, every year, you know, you make donations, you put money away, you give to charity, you do certain things to try to minimize your tax consequences. It's absolutely the same, only even more important when you get to retirement, because you don't have the opportunity to, well, I'll just make more money next year, not that big a deal. I mean, you're starting to take out. You're stopping the earning and you're starting the enjoying.
Well, the other thing is, with the new tax law, many of you are going to miss out on deductions because of the standard deduction or exemption. So, but back to what you were saying, you know, I work with singles. I work with married couples that are first marriage, second marriage. I mean, it's people that, like I define, retirement minded. Retired or within 10 years of retiring, make sure that whatever you're concerned about is addressed. And many of you need a plan in place, a written plan. And you might be thinking, I have an advisor, but maybe it's time to graduate from that advisor to a new advisor. And the reason why I'm independent, I left the big firm, is to give unbiased, truly customized advice based on your needs.
Well, I mean, and that is what people want. I know that's what I want when I go to a person who is knowledgeable about any given subject.
Yeah,
I want them to tell me what is best for me, what works for me.
Right.
I don't necessarily want them to just try to push something on me that they're required to push on me.
Right.
You know, and that's unfortunately, you know, and it doesn't mean that they're bad people necessarily, but sometimes in a situation where someone's working for a large firm, their hands are tied. They don't have the opportunity to offer something that might be in the better interest of a client because they have a limited number of resources available that they're allowed to present.
Well, that's why I use the analogy to make things simple for people is, you know, if you're out shopping for a Chevy van and you walk into a Porsche dealership, You're not going to get the minivan.
That's right.
You're going to get a pretty neat car, but it may not be what you need.
You might drive off in a Panamera. It's got 4 seats, but you're not.
And 4 times the price.
But you're not going to have much of a cargo space in the back.
So that's what I'm trying to convey to people is the advice you're getting, is it appropriate for what you need? There's plenty of advice givers out there. And you know what? I'm not for everybody. My team and me, we're not for everybody. I mean, I'll tell you, Joe, I sit down with 10 families, and a family I calculate as a widower, single, or a couple. You know what? I'll sit down with 10, and 8 of them will be, we can't really help you, or we don't like each other, or you're in great shape. It's those 2 that we could bring tremendous value, and that's why I'm here. That's why I still do educational workshops out in the public, and why I wrote this book, The Retirement Survival Guide, so you, in the comfort of your home, can decide, wow, there's some things. That's the biggest thing I get back is people read this, and I kind of make it necessary in our planning process. They read it and they're like, wow, I didn't know these things. And I'm hearing that from people that are 50, 55, 60, 65 years old. And they're like, I'm so glad our paths cross. So I want to get this book into your hands.
Absolutely. And I mean, that's the thing. I mean, it's if you don't have the answers to questions that have got to be nagging at you, and the closer you get to retirement, the closer you are, and if you don't have answers, it's really got to be bothering you.
Yeah, so it's really for those of you out there that are thinking about it a little ahead of time. Like you might even be 5 years from retirement. Say, well, I got 4 more years, so I need to worry about it. No, let's plan now.
You've got 5 years to make sure that your plan is in place, but you don't want to wait until 6 months ahead of time,
right?
And get the last minute surprise.
Yes, so
it's not a good thing.
I want to get this book in your hands, and Joe, you're really good. Why don't you give them the 3 ways that are really the best to reach out to us, and let's keep it simple and sweet.
Simple and sweet. The easiest thing to do is just text. I mean, everybody texts, and it's so simple to do. Everyone's got their phone in their hand almost all the time. Texting is simple, 797979. That puts you in touch with Don at Ross Wealth Advisors. It's 797979. That's the number that you send it to, rather than like 614 something.
Then the message would be what? Book, help
MRI,
me, call me,
retire, retirement minded. Put that in the subject. Anything you want to.
You will hear back from me right away.
Absolutely. So that's 797979. If you got your iPhone in your hand, go to Don's website. It's rosswealthadvisors.com. If you go to the website, you get right there on the landing page. Right at the bottom, it says call. If you just hit that button, hit call. It brings up another little button that says call or cancel. Hit call. It's going to get you through. That's all you need to do. If it's 7 o'clock in the morning like it is right now, not a problem. Someone will answer the phone. We'll get the message to Don, and Don will get back with you. It's just that simple. This is not very complicated. If you want it even easier than that, just call the office at 614-545-0277. Cut out the middleman. You don't have to push any buttons. Pick up your phone and call it that way.
All those come to me, and I will follow up, and we can have a brief discussion. If maybe you're a little skittish, thinking, hey, you're going to be sold something. We're not that way.
And, the bottom line is when Don gets back in touch with you and you have a little conversation. If you decide, well, you know what, I just guess I'm not interested. Well, that's the end of it.
Not a problem.
That's the end of it.
I want to work with people that are serious about their financial future.
Absolutely.
That's where I'm at.
Absolutely. And you should be, and you have so many things available to you from Ross Wealth Advisors. It would be foolish not to take advantage of them. RossWealthAdvisors.com, 614-545-0277, or text 797979, Ross Wealth Advisors. Joe Bradley here with Don Ross, the retirement boss of Ross Wealth Advisors, and we're discussing retirement planning versus retirement income planning. It's just a one word, but big difference, right, Don?
Absolutely. Significant difference, Joe. Retirement planning is about growing your assets, like in your 401ks, your IRAs, deferred comp. So when you retire, you have that money to enjoy that abundant retirement. Retirement income planning is different in our area of expertise. Remember, when that paycheck stops, everything changes. Are your assets positioned and invested properly to generate reliable income, regardless of what happens on Wall Street or Main Street, and more importantly, how long you live?
So Ross Wealth Advisors is really about specializing in this, right?
Absolutely. Any mistakes during this phase of your life could be catastrophic.
Whether you're retired or within 5 years of retiring or just have concerns about whether you're going to have enough money, call Don's office and schedule a complimentary visit. The number is 614-545-0277, or you can simply visit rosswealthadvisors.com.
This is the Abundant Retirement Show. Welcome back. We are a service of Ross Wealth Advisors. And Don Ross, the retirement boss, is sitting right here. When you hear something that will cause you to think, hey, I need an answer to a question that I don't have, contact Don. Email him directly if you like, don@rosswealthadvisors.com. It's so simple to do that. The message gets to Don, and he responds to you. I don't know what more you could ask for than that. If you'd rather text, simple, it's 797979. That's the phone number that you put in, the 2, rather than, someone's name and grandma, whatever, just 797979. That works. And the telephone is always a standard, sure way to get through, 614-545-0277. And this morning on the Abundant Retirement Show, we're talking about the tax bomb that you don't want to go off on you. I mean,
That's right.
You know it's there. I mean, and if you don't know it's there, then you're learning something new right now. And what you need to know is that tax bomb is out there. Don't let it go off. Don't let it blow up in your face. There's no reason for it to happen.
Now, what that means is, in the world of not using that 4-letter word bomb too much,
right,
is the taxes that are due on the retirement accounts, all of you out there listening, are going to pay taking that money out when you retire. So that's why we need to plan in advance, maybe not put as much into those taxable buckets, maybe put them into some tax-free buckets. And we're talking about my book, The Retirement Survival Guide, that I wrote in the same idea as the boot camp survival guide I received in the Army back when I was young. And it's strategies and concepts that are proven and reliable to help you make good retirement planning decisions, whether you're 45 or 95.
Yeah, and don't make a mistake. This is the book itself doesn't have all of the answers that you're ever going to need. That's what Don's for. I mean, Don is the guy that has all of the answers. It does provide a lot of answers, but mostly it's a lot of thought starters, and it covers a lot of subjects that you need to have answers for.
Yeah.
That's the good thing about it.
I'm all about education, and that's why I wrote it. It gives you a chance to read in the leisure of your home or office or whatever to really understand practical solutions. Now, it's 100 pages long, roughly, 120, but it's a large print. The key is, in a 2-hour read, you'll be highly educated on making informed decisions. Either A, I'm good where I am, or B, I need to work with Don and his team. Or C is I stay with whoever's giving me advice now. Either way, you're educated, which means you come out ahead.
Yeah, you're better off. I mean, if you look through the Retiree Survival Guide, you read it cover to cover, and you go, well, you know what? I've got good, solid answers to all of those things, and they all line up with everything in the book. Then goody for you. You're probably already one of Don's clients.
There you go. There you go. Now, many of them, I had 5 help me edit it over the years, but anyhow, it's on the website, and you can always take a look at it, or more importantly, order it, and I will even provide a 5-minute consultation. How about that?
There you go.
Like.
And of course, the book is complimentary, so it's incredibly valuable. But it is comes to you at no cost. It is complimentary.
And how I usually use it, Joe, is whenever I have a first visit with a potential client, I provide them a copy if we're going to meet again, which is kind of their homework.
Sure.
And maybe they have not read it. Now, let's say any of you listening read it and then follow up and say, boy, I'd love to learn more. We'll sit down one-on-one in my office here in Upper Arlington and get down to building a plan that's customized for your needs, not anybody else's.
So really, I mean, the first step, I think it's fair to suggest to people listening right now, is to make that first contact and get the Retiree Survival Guide and read it. And you will have a great idea whether you want to go forward and make a next contact with Don or not. And I would say that a majority of people, once they go through there, they're going to have some eye-opening questions, and they're going to need some answers. And that's the best way to do it.
Hey, is your financial future worth a 2.5 hour read? I think so. In our planning process, people commit more time than that. But let's take a step back. Regardless of the taxes, which is chapter 2 of my book, we've got to make sure that you're investing appropriately. Many of you have saved very well in retirement accounts and outside of retirement accounts. So my financial MRI is a chance to look at your portfolio for the risk. How about the fees you're paying? And many of you, only because of my experience tells me, have no idea the fees you're paying. And if you're paying over 2%, which many of you might be, would you like to know that now or later?
Now would be good.
Yeah.
I'd like to have known it yesterday.
So it could be robbing you of return. I mean, I've seen fees upwards of 3.5%, 4%. And people are told, well, my advisor said, that I'm paying him 1% or her 1%. Well, it depends who employs your advisor. Are they a bank, a brokerage firm, an insurance company? They might be having very expensive portfolios or financial products that you're in that can cost you a lot of money and you don't see it. We can uncover that with the financial MRI, and I want to do that for you as well.
And, again, I go back to what you say often. It's you're all about education. And when that doesn't mean teaching a person how to be a day trader. We're not talking about that kind of education.
No way,
but we're
no
talking
way.
about getting educated about what you already have and what it's doing. And
what will it do for you?
In some cases, what can it do for you? In some cases, what it's doing to you in that respect with regard to fees that you may be unaware of or unaware how high they are.
Well, fees, and then, I can't talk enough about volatility is basically, how much can your portfolio lose when you have the next market downturn? We have software that can calculate that. Let's say you have $300,000 and it loses 15%. You going to be okay with that kind of drop? Okay.
No.
Especially if you're close to retiring, or some of you have saved much more than that. What's going to happen the next time we do give back all these gains over the last few years, or a big portion of them? Maybe that'll change your timeline to retirement. I want you to retire on your terms, because you know what? Many listeners out there and many people I've run across, they kind of don't like their job, and we need a game plan to get you out and get you retired.
Yeah, and it may be you may discover to your wonder that you're not 7 years away from retirement. You may be actually 2 years away from retirement.
And some of you are getting forced out. I'm working with a family that I won't say the name of the big employer in town, but they're going to rift a lot of people, that means reduction in force.
Yes.
And they're going to get decisions on lump sums to take, pensions, health care benefits. I help people walk through that all the time. So if you're even switching jobs or you're going to get part of a buyout, let's sit down and map out the numbers so you can make a decision with confidence.
Well, and you want to make those decisions based on good information, not just, I've got to do something, so I'll just do this. I mean, you may find out there are tremendous negative consequences to the decision you make, and there could be tremendous positive consequences by consulting with Don and knowing what decision you should make for your benefit.
Yeah, absolutely.
And that's that is the key thing right there. This is all for your benefit.
It's about mapping out a game plan, and let's say we go through our planning process. You read my book, and we have usually 3 to 4 visits, and we might decide after 2 or 3 we're not a good fit or you're good, but by the 3rd or 4th visit, you're going to have a great idea of a plan in place we can put that's written, that's going to have tax strategies, health care, income, everything built into it.
There's a reason that I call Don the retirement boss. I mean, not only is it alliterative, Don Ross, the retirement boss.
It kind of rhymes.
But he's in charge of what your retirement is going to be. Now, you'll obviously live it, but he is here to make sure that you have the opportunity to live it properly, the way you want to.
Right. It's what you mean by taking charge is I don't take charge or control. It's the charge is giving you valuable decision-making information so you can make valuable informations. And then you know what? As soon as we have a plan in place, folks, by the way, it's already obsolete. We have to keep amending it every year because you know what's going to happen, which is guaranteed, and I learned very well in the military, is there's always going to be a curveball that takes your plan and swallows it up and spits it out in 14 different pieces.
No matter what I told you yesterday, whatever was right yesterday could be wrong tomorrow. Or not wrong, but it's certainly needing changed. But that's like everything in life.
We never know.
You can make the best plans in the world, but your plan also has to be able to be flexible and to be able to change when necessary.
Yep.
And I think a lot of people have fallen into the unfortunate trap of feeling like, well, I've got a plan in place, everything's fine, and never talked to their broker, their agent for 10 years, 15 years, maybe never again.
Well,
maybe that person leaves, retires, leaves a firm,
happens
and
a lot,
you make a phone call to try to talk to Bob, and guess what? Bob's been gone from there for 10 years, and nobody's ever told you.
Well, the one thing that we get lots of kudos on from our clients is we are in touch with them at least twice a week. Now, is that a phone call and I'm talking to you? No. No one wants that. What they're getting is content through email, videos, and then our educational classes we do quarterly at a local club here in town. And we talk about the state of the economy, and we usually have a guest visitor speaking on something unrelated to investments. Our next one, we're going to have someone talk about how to do cruises on an efficient basis. And we have a lot of clients that love to do cruises. But back to the book and today's topic, taxes in retirement and pre-retirement. We've got to sit down and map out a plan because it's the number one topic next to my investments, healthcare, and income planning for retirement.
If you don't consider the consequences of taxes, they're going to probably end up being negative for you.
Yeah.
I mean, that's the reality.
Or it's just a surprise.
Well, and nobody wants that.
If you want a surprise, or, again, a lot of people go, I've been working hard and I woke up one day, I heard your show, or I got an invitation to an event, and now it's top of mind. And that's why I'm on this channel on Rewind to the years out there that this might pertain to. I want to reach out to you. I want to get this book to you. Call me, email me, text me. Let's sit down. We've got to do, if you do anything, let's do the financial MRI. Let's see what is it costing you. Because you know what? If you're buying groceries and golf shirts, most of you know what those cost.
Absolutely.
Let's find out what it's costing you to invest your money where it is. Even if it's in a 401k, you have options outside of that 401k and still keep all the benefits. These are the eye-opening things I want to teach you that I've taught many, many in the past.
It's funny, you mentioned, golf shirts or groceries. I would bet that most people, you could ask them right now, what's a gallon of unleaded gasoline going for?
I just did mine at $2.79 or $2.80 or something.
I was going to say, and most people are going to be pretty darn close. They're going to be within a few cents. I know it fluctuates throughout a day, but basically people are going to be paying attention. They pay attention. You go fill up the car and you paid, I paid $2.89 today. Last week it was $2.47. People pay attention to the pennies.
But what's it costing your $500,000 portfolio?
It's a whole lot more than 7 cents.
A lot of people miss the trees for the forest. And so the financial MRI, which if we're going to do that, you're also going to read my book. Let's get that in your hands. Let's get that done. And maybe Joe, just again, go through the contact information.
Absolutely.
And I think we're about ready to wrap up.
Because that's the most important thing. The most important thing is that you do take the moment to reach out. Contact Ross Wealth Advisors. That's the most important thing. At the very least, if you spend 2 hours total of your life communicating with Don and his office, you're going to be better off for it. You're going to either get a peace of mind, which causes you to say, hey, everything I'm doing is right, and I don't need to make any changes. I'm good to go. Or on the other side of things, it's going to bring up questions where you can get answers from Don, and you're going to feel better at the end of that. Yep. Here's what you need to do. Very simple. Call 614-545-0277. Call whenever you feel like it. You want to call right now? Call 2 o'clock in the morning. Doesn't matter. You're going to get through. The message is going to get to Don, and he's going to contact you.
You bet.
Text anytime also. 797979. RossWealthAdvisors.com is the website. Don at RossWealthAdvisors.com is Don's personal email. He'll get the message and get back with you as well. The key thing, reach out, contact Ross Wealth Advisors.